The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour and checking out where the markets are at today. And right now we got the S&P is up 20 points. We have the NASDAQ up 42. Russell's currently up 14 with the Dow up 117. Gold's down 9 points with silver pretty flat on the day after all the big moves. We got copper right now is up almost 0.5%. We got oil up 84 cents. Natural gas is up 9. Yeah, basically 9%. Insane moves. Wow. And, it always surprises me, but still, like 9%. Insane. Corn is up about $5 on the day. Soybeans up 20 points on the day. We got euro dollar is currently down 8 pips. Pound dollar is up 21. Aussie's up 184. 184 pips. And so we're going to go in and we're going to look at that one. Obviously, that's a pretty big move there, 2%. And they had their rate statement last night. We talked about that. So we're going to go into that. Euro yen is currently up 83 pips. US yen is up 67. Pound yen is up $1.26 with the dollar CAD up 54. Dollar franc is currently up 40. Actually, dollar CAD is down 54 pips. And dollar franc is up 42 pips on the day. Okay, so first thing, let's dive on in and let's look at this Aussie. Okay, and talk about that a little bit because there's some news moving around out there of what's going on with the Aussie dollar, with the inflation reports, and how that's going to impact the Aussie dollar. And it's one of those. This is one of those moves that usually doesn't move a whole lot, but the thing I was bringing up yesterday was I was talking about, hey, there's the expectation that in this or the next round they're going to be looking to raise the interest rates. And so people are really going to be paying attention to this thing. We could get a much bigger than normal move. And so I just want to pull that up and, sort of look at the impact of when that rate statement came out. And let's see here. So the rate statement on the Aussie was released last night at 10:30. And you can pretty much see if you just look at the chart. You got to be able to tell where the announcement happened, but right there. And, 10:30. And so usually I don't trade this announcement. I was like, this is probably a pretty nice setup. And just look right here to the high. We got 138 pips. Now, they didn't change the rate. Okay? So why would it possibly, do that? Well, why would the market move up so high if the rate stayed the exact same? One of the big things is a lot of times they've been discounting in the continued decline of the Aussie itself. Like how do I put this? They've been looking at the expectations that the Aussie dollar is going to lower the rate. They've been doing it multiple times, a little bit more aggressive. They have more room to do so. And, they've lowered it a couple times here in the past year. So I think they were at like 3%, or so about a year ago. And they just kept dropping it down to, 2.75, 2.5. And, this time last year, they were looking at dropping it, but they didn't drop it. And if the market was expecting that drop, or not even so much expecting, I guess a better way to put it, pricing in, and they're like, yeah, we're going to hold steady based on inflation data. We really don't need to be doing anything right now with it. And that's pretty much what came out. It was very much a neutral statement. And basically what they did is they've been having this easing cycle, this whole quantitative easing. They've been doing it along with everybody else. And they basically signaled that they're ending that easing cycle. Governor Stevens said obviously they were going to keep the cash rate at 2.5%. And he said the most prudent course was to have a period of stability in interest rates. And he thought that would achieve assistance in achieving balanced growth. I'm just reading off some highlights. And several of the banks are saying basically they've noticed that they've shifted to the statements and everything made, they've shifted to a very firm neutral balance, which means they're going to keep that amount higher. And if you think of a day and age where we have like 0% interest rates and then you have a 2.5%, and that's a carry trade, okay? And so that's a buy the Aussie dollar to make the 2.5%, and on leverage. And so that basically just adds strength because they're not looking at continuing to print money and continue to decrease their interest rates as well. So let's see. Also looking over at their futures for their bonds there, it looks like rose 2 basis points. So, which is interesting. Well, that was in November. Okay, then it came on back up. But anyways, but that inflationary pressure basically let them know, hey, that we can't continue to print. We need to keep our interest rate the same. And the actual statement, the big key here is inflation is expected to be somewhat higher than forecasted 3 months ago, but still consistent with the 2 to 3% target over the next 2 to 3 years. If domestic costs remain contained, some moderation in the growth of price for non-trade goods could be expected over time. And all this stuff comes out to, we don't want to speed up inflation any more than it already is. It's still within that 2 to 3%, but we didn't think it would be at that. We thought it'd be lower than 2%, and it's up in that 2 to 3% range. So we're going to go ahead and just keep our currency strength and print less and not raise interest rates. Anyway, so that's what, if you want to look backwards on it, you can, that's your Monday morning quarterbacking, line up and all that. And that didn't really do you any good, except for the fact that just knowing, looking at the news, talking about what I was talking about, how, hey, they're looking at, some sort of change in the interest rate, potentially. And even though this wasn't a change in the interest rate, this was a change in the stance on the interest rate. We're leaving this thing alone, because if we lower this rate anymore, we're going to accelerate that inflation even further and get outside that 2 to 3% range that they want to get. And that's why we had the big move. And normally I would never, I usually go neutral on this trade. I usually do like an iron condor on the Nadex spreads, or I'll look for a butterfly. But I was like, nope, not on this trade, definitely not. I'm expecting either this one or the next one. I'm expecting a decent move. And so, this is a straddle strangle. But, we'll, and the next one, probably the same thing. We'll see what the statements are. But, I probably will back off of doing any kind of butterflies or, iron butterflies or iron condors on the Aussie on their interest rates for a little bit. And glad I did not do it on this one as well. Okay, so that gets us caught up on that Aussie news trade last night. I just wanted to, walk you through that and just help you see what I see, how I look at the market and putting some of those, different pieces together. Today, we don't really have any major news releases coming out today, except for earnings, but we don't have like government ones. But we'll have Home Depot and the Dow. We're going to have Gilead and the NASDAQ. Wire should come out at 4 o'clock on the Dow on Home Depot. Should come out around 4:05 on Gilead. And it moves a pretty decent amount. So, and it's in the, it's like the 9th top market cap rank for the NASDAQ. So unless it moves major, it shouldn't just have like this massive move on the NASDAQ. But it still does have a decent statistic. Over in the Tiger Den, I posted a whole bunch of stats yesterday. Someone was asking how far does it move, and I was like, well, this is what it does after hours. This is how far it moves in 24 hours. This is what it does by the end of the expiration cycle. And, it's looking at those different pieces. But anyways, just be aware that if you are trading today, if you're holding positions, if you're in those stocks, or if you're in, ETFs, so like the diamonds, or the NASDAQ, the Qs, or, if you're in the futures, just be aware that those are coming out and they can have an impact on your position. And trade accordingly. Okay, so tomorrow we're going to have a couple earnings releases. Let's see here. We're going to have the Dow Jones is going to have a Merck. It's coming on out in the morning. So that'll be at 6:30. All right, so let's be aware of that one. So again, if you're holding that into overnight, got earnings coming up. And then at 4 o'clock, Walt Disney is going to come out. So they've had quite a few moves in the last year. We'll see how everything works out for them. But they'll be having their release. Let's go ahead now and let's look at our news announcements in a little more detail. I'll get you that news plan. So that way you can be prepared for Wednesday and Thursday, Friday. We're going to have some good announcements coming out, especially Thursday, Friday. But Wednesday, let's see here. We got UK Services PMI. We got US ADP NFP. We have the US ISM non-manufacturing PMI. The big mover we had yesterday that dropped the markets and everything else, that was the US ISM manufacturing PMI. So definitely be keeping an eye on this one, but this is the non-manufacturing. And then Australia will have its retail sales. So we got 4 potential setups. Let's walk through each one of them. On the UK Services PMI, and that release time is going to be 4/28. Okay? And as far as expectations on movement, we'll see here. It's the only thing I'd even consider on it would be pound yen. Average range is 74 pips. Over the last 5 years, it's broken 50 pips. It's like 70% of the time. But over the last 2 years, it's only broken at 60. So it's went down a little bit in its volatility there. The average range over the last 2 years is 74 pips. So it usually does move pretty decent. Just be aware that you need definitely a divergence from the expectation. The expectation is 59.1. So you basically are looking about 2.5 higher or lower. Would give you a lot of confidence to stay in the trade. If it's not much off from that, if you don't get a movement in about 10-15 minutes, then that's where you might want to back off. Or at least, trend follow, the trade. And it does, over 90% of the time it goes with the announcement. So if the announcement's good, you're going to see, it correlate with that. Let's see here. What about the ADP NFP report? Really, usually not one of my favorite trades. So it just doesn't have as big of a consistent impact. But it's pretty crazy. Check this out. On pound dollar. On the ADP NFP, this isn't Fridays. Okay, this is the ADP one. All right. So on Wednesday, the pound dollar will move an average of 60, almost 70 pips actually, within 2 hours, and it used to do that 65% of the time. Okay, now it only does it 37% of the time over the last 2 years. So you have a 70 pip range, but 37% of the time does it break 50 pips. We'll talk about how important that is to understand that concept when we get back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pazavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And again, just looking over here, looking at the market and talking about the new setups and making sure you have all the details. And one of the things I was talking about was this UK, or we'll see, actually the US, let me see if I can find the report. Get all backwards now. We're talking about how like the probabilities will, they're dropping, they're deferring on different reports. And when we see that, it's really important to go, if this number is really high, but the percent, if the range is high, like say 70 pips, but the percent is low, say like 38%, it breaks 50 pips. Then what we know, what that tells you is it doesn't break often. Maybe it only breaks half the time or, whatever. But when it breaks really big because most of the time it doesn't even hit 50 pips. So if the average is like 70 pips and the percent of time it breaks 50 is 40%, then you know that when you get those big moves, they're big enough to carry those majority, 6 out of 10 trades that don't break 50, above 50. Actually all the way up to like say 60 or 70. So it's just a high breakout, and you can either choose just not to trade it. It's an easier choice. Or you can go, okay, I'm going to play the odds on how far it moves, knowing that, this is like I'm going to make a lot more, and I'm not going to go for a 1-to-1. So I'm going to have to increase from my 1-to-1 to go for a higher profit if I'm going to actually take advantage of that trade. So the higher percent you have on the 50 pip breakout gives you that's why I like it to be 50% or higher, because then if I'm going for 61 pips on a 1-to-1 or 60 pips on a 1-to-1, I got at least a 50%, then I should at least break even over the course of the trades and hopefully do better than that. A lot of times it doesn't have to move the full distance. All right, so we got the different trade lines up. We talked about ADP and FP. That was the one we were going into, and the one I was saying I don't like. because like it's 68 pips. It's basically 70 pips on pound dollar, but the last 2 years, and it's still been 70 pips for the last 2 years, but over the last 2 years, it's only hit that 38% of the time. So when it moves huge, but a lot of times it just doesn't move at all. The smallest mover out of the entire bunch, on New Zealand dollar, but we can't trade that on Nadex, is dollar yen. So 44 pip, average range, only breaks 50 17% of the time. So that would be a potential butterfly. Let's see here. So that's ADP, NFP. Not my favorite trade. So I'd rather be picky and go a little heavier on the ones that I really like. We're going to have the UK Services PMI. Okay, here's another example. About 60% of the time, about 58%, 58 to 60% of the time it breaks 50 pips. The average range of those is 75 pips. So pound yen, definitely the favored pair there. It has a higher percent break of 50 and a higher range than pound dollar. So pound yen would be my currency of choice for the UK Services PMI trade to do a straddle or strangle, understanding those numbers. Then let's see what else we got. We have the next report in the lineup. It's going to be our US ISM. This one does not have any kind of good stats. Let me compare this to the one from Monday. I just want to look at it side by side. Because one of them is going to be, we have the ISM manufacturing PMI on the 3rd. We have the ISM non-manufacturing PMI on the 5th. The one on the 3rd actually has good stats. Like 70% of the time, the euro dollar moves 50 pips with an average move of 60. So we actually had some good stats. On this one, just to give you a, comparison there, 45% of the time, the euro dollar moves 50 pips with an average move of 54. So, and it's pretty much the same across the board. You only have one currency pair at 50% of the time it moves 50 pips, so I could get a 50-50 chance there with an average move of 61 pips, and that is the pound dollar. So, not really loving the U.S. ISM non-manufacturing PMI. I would give a little more credit to watching it just because of the big impact we just had. Okay? But, it just doesn't have as good a stats as the manufacturing PMI. Okay, so what about Australian retail sales? Do we have anything there? So you just got to dig through these. You got to find them all. And that's why I do the show, to help you out, help you sift through it all. Retail sales in Australia, usually horribly low. Aussie dollar, 20% of the time, breaks 50 pips. Average range, 36. So potentially a butterfly, I would probably normally would do a butterfly on this trade or do an iron condor on this trade. But tomorrow, I would say don't. Just because there's so much volatility the last couple weeks in the market, so much volatility today in the Aussie dollar alone. Maybe they sucked it all out and it'll be nice and quiet. But, we have a lot of volatility going on, and everything's really sensitive right now. So today, it's not necessarily a straight up and down. We got a lot of chop happening, and I think you can just easily break that range. So I probably would avoid that one as well. Okay, so, come on, give me something. What do we got? Let's keep going. All right, now we're going to get into some interest rate statements. Here we go. This is what we really want.
Using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Okay, so we're going into the different news reports, and we're walking through the week, and so now we are to Thursday. Okay, so we're going to dive into Thursday and see what we can find. We got the Britain is going to be releasing the Bank of England is going to be releasing their interest rate announcement. No change is expected. However, on interest rate announcements, we often expect a big move regardless, and this is one of those ones where you definitely expect a big move. It's pretty much the same across the board I don't care if you're trading pound franc, pound yen, pound dollar, whatever. But you're looking for pretty much an 85 to 95 pip move. So if you want to be conservative, say 85 pips. Pound yen usually moves about 5 more pips than pound dollar does. So, but you're looking for about an 85 pip move, and 80% of the time on both pound yen and pound dollar, it actually breaks 50 pips. So it's a very high probability trade. And understand that usually this move happens pretty fast. If it doesn't happen fast, it can take a little time. I've seen sometimes, because this comes out a little bit later, okay? When this report comes out, let me get the exact release time. It's a, sort of an interesting dynamic of a day. But you're going to have that, it comes out at 7 a.m., okay, so which is pretty late for your normal British pound, the pound announcements. And it always comes out at 7 a.m. It's just most of them are usually like at 4:30 on the different announcements. And so since that happens, you have a couple dynamics. One is the ECB announcement is going to be coming out shortly after that, and the press conference is going to come out after that. And so usually it will come out, it will pop, okay? But then it'll sort of slow down. And wait for the euro dollar announcement to come out and the press conference to come out, and they'll pop again. And then sometimes it will slow down. All right? And then the market will open, and then it really goes. And this is especially true on the EU announcement. You'll almost never see anything being said when the euro makes their interest rate announcement. You almost see like no movement. But when the press conference happens, when you'll see a lot of movement, and then you'll see the final big push happen right after the market opens at 9:30. So I bring all that up to say, if you're doing, say, like a 7 o'clock trade there on the pound, you're probably going to be looking at an 8 or a 9 a.m. I'd definitely go for the 9 a.m. so you can get that benefit of the euro dollar. Or you're looking at maybe an 11 a.m. Binary, for a strangle on that trade. So I prefer spreads. But just don't be surprised. You'll usually get that pop, and that, by 9 o'clock is when it's done. So really, I would really focus on those 9 a.m. spreads or 11 a.m. binaries to do a straddle on the spreads or strangle on the binaries on the pound asset purchase facility. You got lots of movement in there. Make sure that when you do the trade that you do calculate your risk and your reward and put the different pieces together, because if I expect let's just say I expect a 85 pip move, then I need to make sure my risk lines up, that it's not going to be too much for me to get that 1-to-1. So what is my risk? How far does the market have to move? Can I get 1-to-1 within that expected range? We've went into this a lot before, and where I've shown how to calculate that. And let's see here. Maybe see if I have this one. Yeah, so here's like one of my calculators. It's an Excel sheet. So Excel's a trader's friend. But I'll stick in like the average range, the floor ceiling of the spread, the price I buy, the price I sell, where the market's at. And then, basically it calculates my risk for me. And I go, okay, well, to make 1-to-1, I need to make, 64 plus the price on the other side. So I need to make like 93 pips on this side, 99 pips on that side. So that was like a Fed funds rate right there. And so I just need to look at it and go, is that my expected move? This is actually a bigger expected move than the Fed funds rate, which makes sense. That's the British funds rate, so the pound should move more. I just need to make sure that it's going to be, if I add that to wherever the market's currently at, so if the market needs to move 93 pips, for me to make profit, where is the market at? Where does it need to move to? Would I be able to, actually make that work within my range? So I don't want to just hop in it because it moves and not have any idea of how far it needs to move for me to get my 1-to-1, and if that expected move is realistic. Over on the euro-dollar ECB interest rate, okay? Now that's going to come out, and when that does come out, there always could be a surprise, but I don't see Draghi raising interest rates, and they're already at 0.25, so I guess he could lower it to 0, but might as well be, okay? And we usually don't see just a massive move from that piece. Okay, the big piece is on the press conference, all right? And they don't happen at the same time. So on the euro-dollar, you're going to have your minimum bid rate at 7.45, but your ECB press conference is at 8.30, okay? And the movement, either way, is, it's big. But you're going to be looking at, euro-yen, euro-dollar. They're moving an average of about 75 pips, and they break almost 85% of the time they break 50 pips. So they're very high probability trades as long as you can get the right risk-reward model in place. So again, 85% breaking 50 pips, and average move 75 pips on euro-yen and euro-dollar. Give or take, a couple ticks on there. It's like 76 on euro-yen and 78 on euro-dollar. But over time, that's not really going to matter, because sometimes it'll be lower on one and higher on the other. Okay, so that gets you the interest rates and how to play those that are coming up on Thursday. Now we got Friday. We're going to have Canada employment change, and we're going to have the U.S. non-farm payrolls. There's been maybe one or two Canada employment changes I haven't seen massive moves on, but pretty much all of them, I've seen a really, I'd say a very large majority. I've seen some huge moves. Now, for you Forex traders, it's not really a Nadex trader thing, but Forex trader, you're going to have about an average 110 pip move on Euro CAD. So now you can't technically, and this might be a fun lesson, you can't technically trade the Euro CAD on Nadex, but there is a way to do it. And I mean, I don't know if you necessarily even would need to. This is more just a fun side lesson for you. But if we go in, and let me pull this up for you. Give me 1 second, and I'll show you how to, if you wanted to, trade more exotic pairs on Nadex than what are listed on Nadex. And so let me go over 1 more second. I'll bring it up, and you'll be able to see it. Okay, so that ought to be sharing over to the screen in a second. I always have to resize the window. Let me resize it. Okay, so this is sort of a fun learning exercise, I guess. If you wanted to make a synthetic, what is a synthetic versus a natural currency? Okay, a synthetic currency, like Aussie dollar, is like natural, okay? But if I put, let's use a different one so I can show you exactly how it works. We'll say Euro dollar is a natural currency and dollar yen is a natural currency. We're just basically saying the dollar is the base, world currency, right? Well, if you want to go, real old school, okay? If you do algebra, if you remember A over B times B over C, all right, equals A over C, because the B's cross out. So I know some of you are like, well, what did you just say? All right, so let's do it one more time. And let me pull this up, and maybe I can even use a little writing tool here to help out. And there we go. Yeah, I can use this. Okay, so like you got A, if you're watching on Tiger TV, okay, over, this is, like I said, old school, high school, math, times, B over C equals A, looks bad because my real handwriting, over C, because the B's cross out. Okay, if they don't, you have what's called arbitrage, all right, which is mispricing that you can take advantage of. All right, so, well, this is the same on a currency, okay? We got, we'll say Euro dollar, okay, times dollar yen equals Euro yen, because the dollars cross out. All right? And if they don't, then you have a mispricing in the market. Well, how can we test this out? How can we prove that this is true? Let's look them up. And so what I can do is I can go over here, and we'll open up 3 tickets real quick. We'll open up a dollar yen ticket. And then, here, let me log into my demo side just since we're messing around on this. Don't want to hit a key on accident, I don't mean to. Okay, so we'll open up a dollar yen ticket right here. Choose demo. There we go. And lock that up, and then we'll go down here to Euro Yen. I'll open up a ticket on that. That over here, and then we'll go down a little further here to Euro Dollar. Open a ticket on this. The only thing I'm really paying attention to, by the way, I'm not looking at any of the spreads. I'm just looking at the indicative price. And then let's pull up a calculator and just do a little math. Okay? So if we go, here, we'll put these in the same order as our example from earlier. If I do euro dollar, oh, that's the US 500. What? I didn't know I had US. There we go. Euro dollar. There we go. Okay. Euro dollar. So 1.3518 times dollar yen. Okay, so 1.3518 times 101.57 equals 137.302326, whatever. The indicative on euro yen, look at it. Okay, so euro dollar times dollar yen equals 137.30. Euro yen times dollar yen equals euro yen. What is euro yen? 137.31. So it's not enough to be off. Like, it can be off, but it can't be by off more than, your combined total of bid-ask spread on all three. So it wouldn't be enough to do arbitrage. But what I'm teaching you is, if I bought the euro and I sold the dollar yen, I would just be, I'm sorry, if I bought the euro dollar and I bought the dollar yen, okay? If I bought both of these, it's no different than just buying the euro yen. Which is a concept a lot of people haven't thought about, haven't dealt with in trading, but it's basically the exact same thing. Okay, now you may have a little more bid-ask spread. That's also why usually your more exotics have wider bid-ask spreads, because that's really what you're doing, is you're doing two currencies. Okay? You're making a synthetic. So if you're wanting to go in, and unless you're somebody who's already trading synthetics, FX, this probably has no, you shouldn't even worry about this. But if you are a currency trader and you've been like, well, I don't like that they're limited, that they don't have, I like to trade the Aussie CAD, or, whatever. Well, then what you could do is you could trade the Aussie, you could choose the dollar CAD, you could drop off these other ones, and then you can go in here and you can, basically now look and figure out what spreads you want. You could choose, say, at the market spreads. Those would be ones that would be really close to where the price is at. And then I could go in, I could buy, say, this Aussie, okay, right here. So if I bought this Aussie one, and then I go down here and buy this CAD. I mean, it's going to expire in like 10 minutes. Get a better example, maybe. I guess we'll go sell. Okay? We'll go with, I'm going to sell this 3 o'clock one. I just want to get a 3 o'clock for a good example for you. And then we can sell the one below it. So I'll go into actually how to put on like an Aussie CAD trade using Nadex, and how that actually could be beneficial for you if you were an Aussie CAD trader, or, a pound CAD, or, just whatever. So stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Okay, so we're talking about how if you wanted to trade synthetic currency pairs that, say, weren't available on the Nadex trading platform, but you want to trade Aussie CAD or Pound CAD or, just anything that had to do with Aussie, Yen, Pound, Franc, Euro, and CAD. So any of those, any combination thereof, you could trade on Nadex because you just combine them. And so you could go in and you could sell the Aussie dollar, okay, this lower spread here. You could sell it for 89.32. You could sell the dollar CAD for 1.1060. You're going to have let's see, what kind of risk do we have on these trades? We've got $8 risk on one side, 10 on the other. So you have an $18 risk, okay, on the trade. What does that mean? That's a mini lot. It's 10,000 units of currency. So for going short 10,000 units currency, you have $18 risk and you $18 margin versus a couple hundred. So a lot better margin, a lot less risk. No stop loss. You have till 3 o'clock. You can get out if you want to, but no stop loss. You have till 3 o'clock. And what price would that be at? Okay, because we're used to proximity distance because you have a little bit of premium in there. Well, if I looked at the underlying at the time of this calculation, the actual Aussie CAD, 98.78. Okay? Oh, sorry, 98.87. It's at 98.87. spread's at 98.78. So it was ranging between about 7 to 9 ticks of premium. So about half of my risk is premium. The other half is real value. And so I needed to move about 7 to 9 ticks by the end of expiration, if not sooner. Then, of course, I can really start cleaning up on the profit. I can make money sooner, but I'll obviously make more as it passes that point, and I shouldn't lose as long as it moves that far. So I could be looking at an Aussie CAD chart and just short both of those, and then just buy both of those back to close it out. And so it's just sort of an interesting way to trade. You start adding it all up, putting all the pieces together, and you can see how you can get some pretty cool advantages. But just a matter of figuring out how to put it together. But if you trade synthetic currencies, that shouldn't be too hard of a concept for you. And just want to let you're not limited just to the FX pairs shown. And that's actually one of the reasons, most traders don't know this, but that's one of the reasons why on the deviation levels up here at the top, we have all the exotic currency pairs that are combinations of Nadex. This is every possible combination, okay? So Aussie CAD, Aussie Franc, Aussie Yen, CAD Franc, CAD Yen, Franc Yen, Euro Odd, Euro CAD, Euro Franc, Euro Pound, Euro Yen, Pound Odd, Pound CAD, Pound Franc, Pound Yen. So all those combinations, we have them right there for you. And you can look at them, and you actually have the deviation levels as well for trading on them. So you can use those for deviation levels. You can use those for news trades. Whatever your preference is. And basically, we've done all the homework for you. Found every possible combo and put all the live deviations updated every day at 8:15 right there on the screen to make it as good as we can. All right, so let's check out where the market is for wrapping it all up here and pulling off the layers of screens. We got the S&P. It's staying on up there, up 13 points right now. The NASDAQ currently up 31. The Russell's up about 9 points on the day, with the Dow up 66. Gold is staying down there right now, down 8 points. We got silver is still flat on the day. Copper flat. Both of those closed down. And oil is giving up some of that big move coming up off those highs. All right, well, have a great time in the markets, and stay tuned. We have another great show coming up for you after this.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.